Our next conversation will focus on stablecoins, which has a market cap today of about 317 billion. Yes, 300 billion in market cap. And so the potential here to unlock value in, most of that is in US dollars, but other currencies like the Swiss franc, frankly, and the euro, there's so much opportunity in there, and we have a discussion on that with our next panelists that we're excited to dive into. So without further ado, I want to introduce you to our panel's moderator, Ben Rausch of Jelly Labs AG. This is stablecoins to real-time payments.
Thank you. Hey. All right. Thanks, everybody, for staying here. We have a great panel today. I think it's a topic that everybody's talking about. It's probably one of the hottest topics of this cycle. It's stablecoins, and I have a great panelist with me with a wide variety of knowledge from layer one to stablecoin issuers. And we're going to talk a little bit about what's up with stablecoins, what's going on, what to expect, and what's the big thing. We actually have a fifth seat there, but the person should be joining in virtually. I'm not sure if this is going to work. Maybe the people tell me. If not, then we do it the way it's intended. But with that said, there we go. Ben is there as well. Can you hear us, Ben?
But we can't hear you.
We see the mouth moving, but...
Yeah, I think you can hear me.
We can hear you now. Yes. Perfect. Cool. Okay, guys, we have around 25 minutes, so I think without any further ado, let's get it rolling and start with a round of introductions. So, guys, Luis, maybe you kick it off and tell a little bit about yourself and what you're doing.
All right. First of all, happy to be back in Liechtenstein. I was living here, did my bachelor's back in the days. Now I'm with Allunity. We are the first BaFin-regulated euro stablecoin in Europe. We just started two and a half months ago with a euro stablecoin, but more or less the long-term goal of Allunity is to build more or less a payment network out of Europe, and more or less the global SEPA instant. What I mean by that is you have a euro stable, or like you have SEPA in Europe, which is working well. But the euro is not globally accessible, and that's what we want to achieve with our euro stablecoin, that you can use the euros for payments and settlement globally.
Nice. Hi, everyone. I'm Johannes. I am the managing director of the Frankencoin Association. Frankencoin is the largest Swiss franc stablecoin, and one of the only ones is another one, based here in Liechtenstein. And basically, what we believe is that the Swiss franc has this very, very big role as a store of value in traditional markets, and it should also play this role in DeFi, and that's really what we're building for. We've built a fully decentralized stablecoin. It's super liquid. It's integrated across many places in crypto, and it's just here to stay and to be this alternative. For people who maybe want to be less volatility in Bitcoin and don't trust the dollar as much. That's where Frankencoin comes in.
Thank you, Hannes. Good morning, all. My name is Miloš Winter-Bogdanovic. I'm CEO and Head of Compliance of the Moon Technology, which is a Paymonade branded business based out of Liechtenstein. We are a standard exchange service provider focusing on on-off-ramp. Back to you, Ben.
Hello, everyone. Here's Ben. I'm from BNB Chain. It's one of the leading layer one blockchain networks where we provide a broad coverage of stablecoins for our retail users and institutional user base. I'm mostly involved in the RWA space, but I also have some touching points with the stablecoins, given that most of those are kind of like RWA based anyway. I'm glad to join the conversation.
Thank you guys for the intro. I think let's kick it off with the first question. For me, it's a very interesting one because stablecoins are so big now that you easily lose sight of the sheer amount of stablecoins there are. So my question would be, what are stablecoins and how do they differ between each other? Because there's so many, and they're the good and the bad ones, I would say. So maybe you can enlighten myself and the audience a bit about that. Maybe Luis, you kick it off.
Yeah, I mean, the main thing is that there are different stablecoins for different use cases. I mean, as you guys building more or less a decentralized stablecoin, there are different use cases than, for example, for us, we are fully fiat-backed stablecoin. So our stablecoin is always 101. So €1 in the bank, in the reserve account is €1 on the blockchain. And so we are fully regulated and can be more or less seen as a bank rate stablecoin that can be used by financial institutions for all kind of fully regulated business. So when tokenized or assets getting tokenized, you use us as we are fully regulated, and you have the security also from the risk side of things, and also like for corporate payments where you need a reliant stablecoin, which is more or less backed in the same currency as you would pay also for example, in Europe, via SEPA. It's nice if you have the same currency, also like on a global scale, so you can send it around the world and pay in euro globally.
Now, let me actually, get back to that, because this point you just said, that you need the fully regulated stablecoin, you need a stablecoin that is compliant, right, with all the rules and regulations, which are two different things. So the Francoin is fully compliant with all the rules and regulations. However, it's not a regulated stablecoin, it doesn't have a license.
Exactly.
But it can still be used by any of the players because it is fully compliant.
If they accept it, yes.
Yeah, but that is not a prerequisite, is it? It's more I'm not sure how I put that. Something, where I think it's a maybe a stamp of trust, you could say, where if you come from the old world and you basically want to have your euro on a bank account, so you trust the bank in the end, but then you want to use this new technology, that's where that comes in. I see it a bit differently as an issuer, or we're not an issuer, right? As someone who's working on a decentralized project, which is kind of the other side of the spectrum, from especially, you guys are probably the most regulated ones because you are both MiCA and BaFin regulated.
Yeah, as I said, I think it's trust in the end, and definition of trust is different,
Exactly.
especially in the crypto world. I mean, yes, on DeFi protocols, you want to use also a DeFi stablecoin and not a fully regulated Euro stablecoin. So for us, it's also, we don't really focus on the crypto side of things. We focus really that you have a payment method in the real world.
Milos, as an on and off ramp provider,
Well, for us,
what is your take on that?
It depends really what's behind, what it's backed by, and in our business model, we primarily handle basically fiat-backed stablecoins that are regulated, and there are various reasons for that. Basically, they're regulated reserve structures, attestations, redemption mechanisms, right? To just make it operationally reliable and acceptable under MiCA going forward, what we are aiming for. And just to maybe add something to your point, I mean, what we see that partly collateralized one or algorithmic stable coins, they are innovative for sure, no dispute about that. But from our perspective, from compliance and client risk perspective, we basically just kind of like, they're not there to offer standards that our payments partners and regulators would accept.
But isn't that a kind of a self-referencing argument? You're not using it because the regulators don't understand, don't accept it, the regulators don't accept it, don't understand it because it's not a standard. So you're not using it because you understand it, but the standard is not made, you know what I mean? So it wouldn't like, what would need to happen for this to work? Because the difference is with decentralized stablecoins, you said they're not there yet from the operational perspective. Agree, liquidity, backing, but this is something, it's an engineering problem, right? Like, so what backing would you need, or what kind of reserve requirements would you need for it to be accepted? And I just discount the argument of because the regulator doesn't accept it, the regulator doesn't understand, is not an argument for me. I'm just, I'm like shooting on both sides because you're kind of relying on a non-argument. It's this
chicken and egg.
like, oh no, our existing partners don't like it because they don't understand it. Well, that's not an argument. That's like, okay, but then what needs to happen for it to work? How do you
for the business model we run, it needs to be absolutely EU regulated, and that's what
but it's the same fucking argument.
But
again.
it is, but that is what we can. That is what I can tell you. It's not basically what I wish for, because what I wish for is not relevant. It's more about what we can, in which environment we can operate.
I think what's clear, and what I hear is there's always this decentralized, centralized argument, and especially when it comes to stablecoins, obviously we've seen a big move towards centralization with like some big issuers, and all Unity is joining the game there. And I mean, I'm building DeFi protocols, so I know the pain. But it is what it is. I think stablecoins have different roles within crypto, and I think there's a place for each of them to a certain extent. Yeah, I think maybe we use this moment to segue a little bit into one of the topics of this panel, is like real-time payments. Sure. And look a little bit into this and see where the value of stablecoin comes in, and then maybe even ask the question if only stablecoins are suited for that, because there are other things that can be used for payments. I mean, Bitcoin some people say was intended as a payment system, but there are also things like tokenized treasuries or money market funds that could be used for that. So what's your opinion on this? And maybe we start with the virtual seat, because he has been quiet for quite some time. Ben, what was your take on that?
So I can speak for the infrastructure part, right? And the infrastructure part both has advantages and disadvantages when it comes to this. We don't control the stablecoins, which is also part of why we don't control them. We cannot stop them. So there is a big adoption of stablecoins. We have at the moment about 14 billion of stablecoins issued on BNB chain. And when I say BNB chain, I mean the BSC layer 1. We also have a layer 2 and a decentralized data storage solution. There's also been a recent announcement by our venture capital arm, Easy Labs, which invested into Better Payment Network to enable basically cross-border payments easier. What's our concern and what's most important to us is that everybody has the best payment infrastructure that they desire, right? That goes both for really, really highly regulated and let's say countries with the best traditional finance infrastructure, but also those that don't have this best rails implemented yet. So for example, with Better Payment Network, we just got now really good coverage over the Mexican peso, also in Nigeria and so on, also MiCA regulated Euro stablecoin, Euro I. And yeah, I mean, at the moment, there's still big dominance of USDT and USDC on BNB chain, but a recently new stablecoin got introduced, USD1, issued by World Liberty Financial, which we're kind of adopting more and more, I would say. So yeah, infrastructure-wise, for us, it's just important that the infrastructure runs, that everybody can use it, and that everybody has access to those type of payment type of solutions, right, with the use of stablecoins. If you ask me personally, stablecoin, probably the number one stablecoin is Bitcoin at the end of the day. But for day-to-day usage, fiat stablecoins or really, really high quality stablecoins are really, really something that the people are used to. Yeah, we've seen adoption, from the bottom up for the past 10 years. I believe the past 1 year, maybe 2 years, we see now the disruption from top down, where the institutions are becoming increasingly interested in this. And right now we're living in a moment where we see those two worlds kind of like coming to a common consensus. What exactly this consensus is going to look like in 1 year or 2 years from now, we probably don't know yet, but I believe we're at this moment right now.
Okay. Yeah. Anybody else?
I mean, I can totally agree regarding this thing about infrastructure. So in the end, and that's also regarding the question, yes, there are different kind of assets you can use for payments, as there are also like different infrastructure you can build on payments. What I mean by that is, if you, for example, as we often get asked, yeah, there's the digital euro coming from the ECB, and what is the difference to all Unity euro? And there we always argue in the direction of there is a total, like the digital euro, it has use cases within Europe. But if you want to have like a global accessible euro, you need to be more or less on all public blockchains, because in the end, on public blockchains, the settlements are happening because you somehow need to connect all different local hubs globally. Mm-hmm. And that's why, from our perspective, there are now stablecoins. You can use the Euro stablecoin to connect Europe with Latin America, with Australia, etc. And the same has to happen also on their side. Mm-hmm. So we see for example, that we are here in Europe, the All-Unity Euro, the fully regulated one. You have in the US, you have Circle. And that's like how you also have to build a agnostic system so that you're also like interoperable with, for example, a DeFi-based stablecoin. And I mean, there are also like tokenized deposits, etc. But if you go into this direction, it's again only owned by banks. So only banks can interact with tokenized deposits. And this was, as you have now in the old world, you have also already like different kind of money. And the same is happening also now in the tokenized world, because in the tokenized world, when assets getting on-chain, the assets are on-chain, but you also have to be aware that the payment side of things, so that you solve the delivery versus payment issue, that the payment structure is also on-chain. And then it's always like, okay, how do I want to pay? If I want to pay with tokenized money market funds, maybe there are use cases, and otherwise there are stablecoins.
I mean, I'm a big fan of this money of Lego idea, right? Where, and I can give you a very concrete example of something we've very recently built, where you don't need to worry about that, because you have, on your side you might have your All-Unity, you have, you're an on-ramp, you might not support All-Unity Euro, but you might support the Circle Euro, or a URI, or whatever it might be. And you don't need to worry about that, because it's permissionless. You can have liquid markets in between, and as long as you have liquid markets, things just work. And I think the very, very good example is the partnership we recently did with Gnosis and Monerium by indirectly Montbellera, which is an off-ramp in Switzerland, where we were able within weeks to create a user experience in the end for Swiss users that would have direct access from their fiat bank account into Frankencoin, and on the other side to pay with Gnosis Pay, with a Visa card. They could pay anywhere in the world, and it's basically frictionless because it's all abstracted away. You don't have to worry about that, and that works. In the old world, that would have been years and years of work and contracts and negotiations and stuff. But here we could say, okay, so we have the on-ramp which goes from Swiss franc into Swiss franc stablecoins, and then we need a liquid market going from this into URI, which on the other side is accepted. And funnily enough, I had this conversation with some interesting people recently who from the old world, and looked at it and said, well, this is a really complicated process. And I said, yeah, you know why it is complicated in the back end? Because of the old world. Because the hard part is that there's different KYC standards for Switzerland and the EU. Like, the hell, right? So you need to do KYC twice in a sense. There's the visa side of things is super inefficient because there's different licenses in different countries, which visa needs to go out. So you cannot actually issue the card in Switzerland. You have to issue it in Europe and so on. So the whole decentralized part simplifies things and makes it even possible, but the complexity still is in there. So this is why I'm looking up so much to people like you, building this interface, because it's just you deal with broken tech is probably the proper term for it. And talking, coming back to your question, when you think about real-time payments, real-time payments is non-issue with anything on-chain, because you have 10-second settlements if you do it on Ethereum. You have, sub-second settlements in other layer 2s or, things like Solana or whatever. The hard part is always in on-ramping, off-ramping, when the old world comes in. If you would get rid of that, we would not have to have this conversation, because you could literally use, if I want to pay with money market funds and you want to get paid in Bitcoin, it's not a problem.
No. Yeah, but this is like also the thing about why you need more or less than regulated stablecoins or trusted.
No, you don't. No,
because
I
the end,
disagree, because if you make it, so the problem with the regulated stablecoins then is it becomes worse.
I don't
because
think
then
so.
Suddenly the regulator has some weird ideas about introducing, oh no, but you have to settle it through, I don't know, T+2, because you also have to do this compliance check there, and you know what I mean?
Yes, but when you, for example, take it, where are corporates? Corporates are with the old banks. So, and they will never open a wallet infrastructure.
That's where I disagree.
They want to be like with their house banks. Like we're talking to the biggest corporates here in Europe, and they are like, we want to stay, for example, with Deutsche Bank. So now you have to build a bridge and build a stablecoin that can be also used, for example, by a Deutsche Bank.
Do you, or does if looking at the Swiss case?
I I love that this conversation is getting a bit heated, and I think it's very interesting to listen to. But we have a few minutes left, and I would use the time to give everybody a final word about the topic.
Yeah.
So limit yourself to, I mean, you see the timer, it's like a minute each. Tell the people a little bit about what stablecoins mean for you, what is happening on your end, because we have such a variety of people from the industry, ranging from centralized stablecoins, decentralized stablecoins, on-ramp, off-ramp, and infrastructure providers. I think it's very interesting for the people to hear more about what to be expected and what the challenges you are facing at the moment. So maybe we do it the other way around. Ben, you wanna start with that?
Yeah, definitely, because I can give an insight here maybe from the BNB Chain Foundation side of things, right? So what we differentiate mostly are natively issued stablecoins and bridged stablecoins, basically. So what we want to achieve is to have most of the stablecoins that are used on BNB Chain natively, right? So for example, USD1 is one example of this, and the bridged versions would be, for example, USDT is bridged from other ecosystems. This is from the foundation point of view. But when it comes to adoption point of view, which is more important, I would believe, is that we enable the best, finality, right? Finality of transactions. I believe BNB Chain is one of the best in providing this at the moment. And we want to enable everyone in the world to have access to financial services when it comes to, crypto asset, when it comes to tokenized asset, RWAs, whatever it is, right? And to choose themselves if they want to swap between tokenized gold, fractionalized tokenized gold, or a stable coin, or or whatever crypto asset basically there is, and this ranging from the most regulated to not regulated that much when it comes to that they can afford it. What I mean by that is
Ben, we need to give the others a little bit of time as well.
Yeah, sorry.
Maybe if you jump to Milos now, because before we close, everybody should have a little bit of a...
Sure. I think from our perspective as an on-off-ramp service provider, basically what we've noticed now with the stable coins in general, that they've become regulated utility, especially with MiCA, that we aim to get granted here in Liechtenstein. Infrastructure has matured, so we also noticed that there's a lot of payment processors, banks, custodians that are willing basically to kind of like more connect rails and embrace stable coins, especially if compliance is guaranteed. And then on the other hand, the clients that are the end users, they're the ones who kind of like see stable coins often as kind of like a more faster settlement tools, if we can call them that, as an alternative to SEPA or whatever, like from the traditional finance you're not a big fan of. So in a nutshell, I think that regulation is never, easy to deal with, but it's something that gives a bit of a certainty now in Europe at least, and infrastructure made stablecoins usable, and at the end of the day, like, users just turned it into a viable alternative, right?
Yep.
Sorry. Yeah, I have 20 seconds. I'll do quick. Actually, what you just said is a very nice sum up, and it's this: do we want to build a new system and make kind of the next generation of financial tech, or do we want to, take our little businesses and try to press them into a broken system? I'm a very much proponent of the first part, and it's what you just said, what is happening, what we see that banks are really kind of embracing this, saying, oh shit, this new stuff is actually more efficient, let's do that. And that stablecoins become something which are ubiquitous, which are integrated everywhere. And that's what the world we're really building for. That's what I want to see.
Yeah, totally agree. In the end, more or less what we have to do now, all as stablecoin issuers and infrastructures, to educate the real world about what infrastructure do you need and how you can integrate it in a way that you have the old world with the new world connected. And that's more or less also our purpose, to build the infrastructure around us, that euro is globally accessible.
I mean, spot landing. I mean, we just did it in time. Ben, also thanks for joining in virtually. Thanks everybody for being on the panel, and thanks everybody for listening.
Thank you.
Have a wonderful token summit.
Thank you so much.
Thank you.
Thank you.
Thank you.